Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the macro and the short-term charts, particularly moving into the upcoming week. Will Bitcoin see a continuation toward the upside, or are we destined to see a move downward? What are the key levels you should be paying attention to? What potential opportunities are there on the short term? And how are those macro charts developing moving into the new weekly candle close? Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, join us on Telegram. It is the first link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us with nearly 700 members in the VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats, our general chat, trading chart and education chat, news, help, daily video, and trade setup chat. Check that out, guys. Join up by contacting me in the pinned comment of the free channel by clicking my name or these links for more information, and let's go ahead and dive on in. If you have been following the channel now for the last couple days, weeks, or for a very long time, you would know that we were telling you guys we were expecting a correction at that $66,000 mark, as we saw the RSI indicating exhaustion, we saw the bearish divergence develop, and we saw the eventual breakdown and negative momentum shift as a consequence of that RSI breaking down. Following that, we saw a directional continuation into the $60,000 region. Once we reached $60,000, we were telling you the possibility for a move to 57,000 is still on the table. However, it is unlikely. It's on the table, it's possible, but it is unlikely. What we were telling you is we were actually looking for a move toward that $62,500 to $63,000 region upon the breakout of the 45-minute 50 EMA, which happened right over here. We eventually saw the continuation into the resistance exactly as expected, as we posted here on the Telegram, and that was a perfect move upwards. This level now is acting as a critical short-term resistance. If we take a look at this level, of course, this level spans back quite some time, as it was the prior level of horizontal support in the horizontal consolidation before that extension up into the $66,000 region. You can see we acted as support for about 10 days over here before continuing toward the upside. And as we know, prior support becomes current resistance. So this area is now the current local resistance. We are going to need to break up to see that continuation. Until then, we are expecting possible corrections, and we'll be discussing both scenarios in the video today. Moving over to the market data, 24-hour volume, how are we looking? 24-hour volume dropping 51% at 59 billion. That is expected. It is of the week. It is the weekend, of course. And 24-hour liquidations down 42% at 70 million. Of the 70 million in liquidations, 45 million have come from longs and 25 million have come from shorts. Taking a look at the DXY, ending the week with a massive green candle. We are watching very closely on the weekly open here, as we are expecting a rejection from the DXY. If we are able to sustain within this range, we could see the price move back upwards to this 1 year long downtrend. I am looking for a rejection, but we'll watch how that develops. Of course, we do know with global conflicts escalating, times of fear and uncertainty, it is normal for the DXY to move upwards, and that is particularly what we have seen over the last week of price action. With the conflicts in the Middle East developing even more, we have seen now the dollar actually move upwards. Now, the key levels are still intact, this base of support. If we drop below it, we are expecting a multi-month correction for the DXY, but at the moment that it has seen a little bit of resilience upon the conflict, we have seen the DXY move back upwards. So we are watching closely on the weekly open to see how that develops. Moving over to the S&P 500, looking very good. Again, that weekly close was able to retest and sustain above that weekly resistance. This is going to be our weekly support now, as we have flipped it as support, and we are watching for directional continuations much higher. Only upon the candle close below 5,680 would we then expect directional continuations back into our lows. This is going to be our yearly lows. Until then, we are expecting moves toward the upside, looking fantastic. And that is it for the broader market updates. Let's go ahead and get stuck into Bitcoin. So like we said, we're going to keep today's video short and sharp, discussing really the short term, what Bitcoin needs to do to go higher and the implications of that, and what Bitcoin will need to do to go lower and the implications of that. We'll also be discussing the upcoming weekly candle close and the macro charts broadly. But before we get into that, guys, if you want to support the channel, support me, and support the videos, and even support yourself, sign up to BitGet, BitUnix, or BingX with the links below. You just need to choose one of those exchanges. You'll get a 15% trading fee lifetime discount on your trading fees by signing up to those links. You have to use those links, and that discount will build up to 45% trading fee discount based on your trading volume. Again, support yourself, save yourself some money on your trading fees. It goes a long way. Support me and the channel. We'll play ad and we'll jump back in. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it. We're going to be taking a look at Bitcoin short-term price action. So the key levels we are really paying attention to here on the hourly are going to be our horizontal basis of support, which is going to be that 60,000 week low, which we'll go ahead and mark out with a horizontal ray right over here. This black line, let's go ahead and thicken that up. That is going to be our base of support acting as our bearish trigger, as well as the cluster of resistance we have marked out by this gray box between the price points of 62,300 and 62,650. Of course, we do have that 1 hour 200 moving average we can see crossing through this region, which is of course crossing through that horizontal resistance as well. For Bitcoin to continue higher, keep it very simple. We need to see the price action break within, through, and sustain above this horizontal resistance range, which was once support. If we go to the 4 hour, we of course have the 50 EMA crossing through this region. We can see on the 50 EMA, we had again the price sustain above. We broke below, we entered a downtrend. This area is still going to be an area of resistance. So we're looking for a 4 hour close above the 50 EMA to indicate the price is likely to sustain within and above this horizontal resistance. If that does occur, we are expecting a continuation back upwards into the $65,000 to $66,000 region. That is what we are expecting in the new week. So the new week, we would expect a move into this region. We would expect a green week for Bitcoin. Now, if we are able to see this upon the breakout of 66,000, which is going to be the strong high we are looking at, breaking above this region, we are actually, this is a very, very bold statement, we are expecting a brand new all-time high for Bitcoin if Bitcoin is able to break through and sustain above 66. The reason we say that is because, again, going to the weekly chart, we have got positive momentum. Going to the daily chart, we can see a break of that prior high right over here would kind of validate that pattern we've been developing, which again is going to be, we have our lows, we have our higher lows, we have our lower highs, and we have our higher highs developing. So we are likely to see a move through and breaking through that high time frame diagonal resistance of this now 6 month plus horizontal descending channel consolidation, So again, for us to see a new all-time high, which I do believe will occur upon the breakout of this downtrend, we will need to break 66,000, and therefore I say upon the break of 66,000, we would expect an eventual new all-time high for Bitcoin. However, we are still a while away, as Bitcoin does need to break through this current resistance to then see the move into this resistance, and then we need to break through that resistance to even see the continuation. And Bitcoin isn't looking too fantastic on this smaller time frame. So we'll jump into the smaller time frame in a second, but let's talk about our lower support ranges. While we are underneath this resistance, there's one support, now resistance. Resistance is resistance until it is not. The risk return for downward continuations as opposed for break-ups are significantly in favor of these corrections. So only upon the break and sustain above this region would I be confident for longs and continuations into resistance. Now again, we actually took a long into that resistance. If we move over to this channel over here, we can see we took a long upon the breakout of the 45 moving average right over here into that resistance range, which played out absolutely perfectly. And we are looking now to exit that position, which we have already, looking for continuations back down. And only upon the breakout of this resistance would we then flip back into long positions. Again, we want to trade with the direction of the market, not against it. So looking at the short-term price action, again, guys, we have got our sell side liquidity right over here. A loss of that $60,000 region will increase the likelihood, or likely result in that final flush into 57. Now, we do still have our buy orders down here, just in case this region is hit again. While we sit between 60,000 and this resistance, we are developing a horizontal chop. The directional break, if we break upwards, will determine the directional continuation. If we break downwards, we will see the continuation back to 57. So 57, although like we said was unlikely, it is still on the table, but for us to actually see that move, we are now needing to break below 60,000 again. So a break of 60,000, we will see a continuation grabbing that bottom side liquidity, then we will see the continuation back upwards. Those are the two scenarios for Bitcoin we are watching. Again, guys, moving over to the smaller time frame, let's take a look at the levels we will need to break downwards or upwards to see moves into our local resistances and supports. This is going to be the 15-minute chart. This is going to be the current downtrend Bitcoin is under, as represented by this green trend line. We can also see we have got our strong low, our sell side liquidity in the short term, as per our prior wick. A break of this level will result in a correction back into that mid $60,000 region. We're looking for around 60,700. This is going to be our local support. A loss of this support will result in a move back to 60,000. So we have got two supports between us and 60,000. Watching these trigger points breaking below this low, we are looking for shorts towards our support level. If we show strength, we will look for bounces. If we break below this region, we then look for a continuation into 60,000. On the flip side, the downtrend we can see developing, we will need to break above this region to see a continuation into our resistance. Again, that breakout is not going to be strong enough to confirm we are going through this resistance. We do still need to see, or what I would like to say, we would still like to see, a 4-hour close above the 50 EMA to signify that this trend is likely shifting back upwards. That is what we are watching out for in the short term, guys. I'll be paying attention to these levels. And again, we are developing what we would call a chop zone. So if we do see these swings back to lows, do not be shocked. And I would not be too eager to be quickly and, I would say, irrationally jumping into positions moving into the upcoming weekly open. I would be cautious. I'd be watching how the market reacts and just acting alongside with it, rather than trying to predict and get ahead of where the market's going to go. Because if we do end up developing this chop range over the next 4 or 5 days, it is likely you're going to be chopped out multiple times trying to predict where it's going to go. So we have our key levels. We have the levels you need to be watching. We know what needs to happen at these levels. We've got our validations. We've got our invalidations, and we have set multiple plans to execute upon these different moves. We've got everything we need. Now is a game of patience, waiting for the trades to fall into your lap and waiting for the market to move into your positions. Okay, moving over to the higher time frame. Like we said, we do have that weekly candle close coming up. And let's just talk about the daily chart for now. Again, we are in this macro descending channel formation. The price action is in a downtrend. So while we are in this downtrend, the price action is very able to move between the range high and the range low. This is all going to be considered perfectly healthy and perfectly normal price action. There are some limitations of this. If we move over to the weekly chart, we can see, according to the weekly chart, we have got our uptrend of our Gaussian channel and our Ichimoku cloud crossing through the price point. I'll go ahead and draw a diagonal at around 59,000 to 56,000. This diagonal trend line around about this region. Actually, you know what? Let's go ahead and make this red and make it thicker. This level over here is going to be an invalidation from a technical perspective of the uptrend, or a sign that the uptrend is starting to break. If we look at the macro uptrend, according to the Gaussian channel, we have been in a macro uptrend since this point right over here. The trend flipped bullish from this point. According to the Ichimoku cloud, we have been in a macro uptrend, or we have flipped bullish from this point over here. Upon that breakout of the Gaussian channel, and again the breakout of the leading span B on the Ichimoku cloud and continuation above it, we have been in a macro uptrend. According to the technicals of the chart, we are in a macro uptrend, we are macro bullish. However, if we were to break below the upper band of the Gaussian channel and Ichimoku cloud respectively, that would signify some high time frame weakness we have not seen in prior uptrends, and generally when we do see it in prior uptrends, it generally leads to extended macro continuations, such as in our last bear market over here. If we look to prior price action in the even prior bear market over here, macro downtrends, again, if we look at prior instances in prior cycles, we have seen again macro bear markets starting upon the breakout or breakdown of these two respective levels. So that could signify, if we break below these levels, even while within this macro descending channel, it could tell us we are seeing excessive weakness on the higher time frame, which may develop into invalidations of the channel itself. And I say may because the channel is really the key level we need to hold, even if we break down from these technical levels. But we can go to use this to kind of bolster the argument that we are not going to see a steep correction below that 57,000 region, and that 57,000 region, because it does have that diagonal support from the Ichimoku cloud and the Gaussian channel, may act as a reversal point on the weekly for Bitcoin if we were to see it retest. So again, I'll say, while we remain within the channel is bullish, and only upon the invalidation of the bottom of the channel would we expect macro continuations downward. As per the weekly candle, we have got but 1 day until the weekly candle closes. Depending on what Bitcoin does, won't really have too much of an impact on this weekly. The candle itself is pretty much insignificant. The key level we are really watching is going to be that midline, that $60,000 region. So only if we see this price action pretty much nuke below 60,000 and close a weekly candle below 60,000, is that really that's really what's going to be very bearish. And for it to be very bullish, well, we just need to sustain above 60,000. So it's unlikely the weekly candle is going to be particularly bearish in terms of macro consequences. In terms of a singular candle, yes, this is a bearish candle. Of course, it's a bearish engulfing candle. But in terms of macro consequences or directional impacts this candle will have, is quite low, quite minuscule, provided 60,000 sustains. So in my eyes, provided 60,000 sustains on the weekly for the next 24 hours, it is unlikely that this candle will have any high time frame ramifications upon the closing price. That is it, guys. We'll leave it there. Have a fantastic day. We'll catch you in the next one tomorrow. See you then.